session for today. On this beautiful Friday, we're delighted to have you on the session. You know what, it's always a thing of delight when we come together to get knowledge and insights on various topics that, you know, we can leverage on for our business growth. We're so glad to have you. Welcome. We'd like for you to introduce yourself in the chat. If you're just joining, kindly let us know your name and where you're joining in from. Also, if this is your first time on the session, kindly indicate in the chat by leaving your name, your business name, and where you are joining in from. Thank you. We'll just get right into it then. So today, we will be talking about managing your business finances for success. And I cannot overemphasize the importance of these for small business owners. Right, as small businesses, we've experienced a lot of change from the beginning of the year right up until March, especially with the full implementation of the cashless system, and then a whole lot of your transactions being done through digital means. So we saw we saw the importance for these and to help enlighten more on how you can, you know, better infuse this in your business, and also for business growth, so as to not lose track of all the changes happening in the business environment. Oh, hi, Val. Thank you for joining. You're very welcome. Val is joining from Kenya. Wow, you're very welcome. It's so good to have you on the call. Thank you so much for joining. Okay. Thank you so much, Olutola, Ubeze, Ahmed. You're very welcome. We see you, Zainab Zubar. Thank you so much for joining. We appreciate you. Oh, Totality, you're welcome. You're welcome. You're welcome. Thank you for joining in. We hope that you really have like an insightful session. We hope that you get a lot of knowledge from this session. How has the week been generally? How has business been? How have you been coping, you know, with the cashless system and having to receive payments through digital means? How has that been? You can leave your responses in the chat. Olutola, understanding how to properly manage our finances, especially during this time, is very, very crucial for small businesses. And so from receiving payments from, you know, online, receiving payment via online payment solutions, to sometimes customers can say, oh, my network is terrible, I can't make payments now, or say, oh, I've sent it, did you get the credit alert, and the likes, right? And so we want to be sure that, you know, our money are coming in, because when these products go, the cash flow also has to be steady, so that when we need to then restock our inventories or our products, there's enough cash to do that. So this session is typically going to just you know, spotlight the importance of how you can how to manage your finances, how you can better keep your records, how you can manage the credit system in your business, your customers, and the likes, just so that you don't run into losses, because it's very easy to lose track as business owners. But it is our duty to ensure that you stay on track, because you have been resilient through other times, and so we expect that, you know, the resilience will stay with you through this time until, you know, the whole situation become more easy. You're welcome, Evans Oyaro. It's so nice to have you on the call. Parts that would, you know, help us to dissect this and give us means and features that we can infuse in our business to properly manage our finances, so that we don't run into risk, to avoid the risk of, you know, the whole business environment and the changes that's been occurring in a while. Our speaker today is an expert, is a risk analyst and financial expert with over a decade of experience. He specializes in business analysis, policy formulation, and risk assessment. He has worked with different financial institutions nationwide, and is currently the head of enterprise risk management at Canary Point Corporate Service, where they provide top-notch financial services for clients across the country. He's an expert in the field with various certifications to show for it. So join me this morning as I make welcome of our speaker, Oluwatoyin Oderinlo. You're very welcome. Thank you so much for joining, Mr. Toyin.
Yes, just like she mentioned, my name is Oluwatoyin. I hope we have an interactive section. It's not going to be a lecture, but it's a process which I'm planning that we all learn together, share ideas to see how we can move our business to the next level. So I don't know if we are all ready. I can just share my screen so that
Okay.
comments.
Give me a minute to do.
Just like you said, the topic is managing business finance for success. So I'll start. The first question is, what constitutes a business's finance? Basically, I hope we enjoy this approach to it. This is an example of what we call a balance sheet. And an understanding of this is sometimes what separates small business for large corporations. So if you have a deep understanding of what a balance sheet is, it may go, it will help in a long way to give direction to your business, to make you see how quickly your business can grow, especially from being a small, medium business to a large corporation. The basic component of a balance sheet. A balance sheet is what we sometimes is called financial. There are about 2 financials that every corporate business should have ordinarily. You should have what we call this balance sheet. You have what we call profit and loss income statement. Then we have what we call cash flow statement. So all these 3 documents are essential for corporations, large businesses. They are quite essential because either we are making return to one or 2 bodies, or sometimes when you want to access them, these are some of the documents that banks will request of you, and sometimes these documents these documents are expected to be prepared by auditors, chartered auditing firms or certified auditing firms, so that they are audited, because the figures on it must be as authentic as possible. So basically, what I'll be looking at this morning is, please, if like I said, I would like this lecture to be interactive. So if you have a question, you can as well indicate so that we have a deep understanding. The major content you find on the bar is what we call assets. That's probably is the first thing, because the balance sheet is arranged on the importance of each of the components. From the definition, we have assets are what? They are a resource with economic value that an individual, corporation, or country owns, controls, with the expectation that I provide future benefits. So assets are things that generate funds, or means through which a company or organization or whatever, a small business, there is no business that does not have an asset. If a business does not have an asset, that business is almost non-existent. That means things that bring money, through which you generate profit, through which you generate cash.
On the balance sheet, and the content of this balance sheet depend on the kind of business that you run. For a financial institution, maybe a bank, microfinance, the content, what you find on the assets section may be different from what you get when it is a manufacturing business or production business, may be different from what you find when it's a trade and commerce business. So basically, what you have there is for a trade and commerce business. This balance sheet is an example of a trade and commerce business balance sheet. Hope we are getting. If I don't get what I'm saying, please, you can just indicate. So that's what you have for it. So we have what we call cash. That basically for all entities, for all businesses, this is the first item on the balance sheet, because it's, to a great extent, is the most is a liquid form of asset, and is the most reliable form of asset. Cash at hand, or cash, even sometimes cash in bank. These days, most of our cash is in bank, really. So, but even when you have cash in the bank, you are still exposed to some level of risk, because it's not all the time that when you go to the bank. That recently, what happened with the Naira redesign in Nigeria, a lot of people have cash in their bank account, but they could not access it. So that's tell you that even when you have cash and it's not in your custody, there's some level of risk attached to it. A lot of us, what we've experienced since like January is that even that's why we have funds in our accounts. Our account is credit, also on the credit, is not on debit side. We sometimes find it even difficult to transfer funds from our account for the purpose of business, because why? There is congestion in the financial system, because a lot of people now that ordinarily will have gone to withdraw cash and do that, we're now forced to depend on electronic transfer of funds to do businesses. So that tells you how important cash is, and that almost crumbled the economy. If you agree with me, it's like it's almost grounded the economy. So that's tell you how important, and that's why it is one of number one item on the asset column of your balance sheet. Then account receivables, that means funds that maybe you've sold some items. You understand? You have sold, so you are expecting funds from such people. Maybe they promised you, or you have check and all these things. They promise you that funds will be paid for things you have sold to them. Inventory, that means that is item that has not been sold. That means what, let's say if you are, like I say, let's say you, assuming you have a supermarket, what is the value of items in your supermarket that you are planning to sell, or in your store that has not been sold? That's what forms your inventory. So those are things to some extent that you can quickly convert to. That's why it's called total current asset. You now have what we can call long-term assets. You can have machinery. Like now, when you are now talking about manufacturing company, machinery, these are things you use in generating money. It's part of your asset. Though we call them fixed asset, or what you can call long-term asset, because you cannot readily convert them to money. But if you need money tomorrow, you can pick any of your equipment you use to do your business and sell them. Though you may not get fair value, you may not get the actual value you think they should give you because of what? Because you of what they need for cash. You can quickly sell any of them and convert them to cash. That's why they are called assets. Currently, they are being used in production to generate cash, to generate income for the business. But if things become so bad, you understand, you can equally do what? You can sell them and cover equipment, all sorts. Sometimes in this column too, if you have car, it's classified as your asset. That means for running of the business, you understand. So in essence, they are called what? They are called long-term assets, and some of them are called fixed-term assets. We have all kind of, depending on the model of business you have. Sometimes we have called intangible assets, which could be in form of patent, which could be in form of intellectual properties and all sorts. Depending on your, even goodwill too. That means the worth of your brand in the market. These are things that could be translated to money. So so you can see there the total number of assets. That's under the asset. Then we have what we call liability. If you are on my side, it says something a person or company owes, usually a sum of money. That means what is your exposure? What do you currently owe? That means maybe you've bought goods from customers, they've supplied you have not paid them. You understand? Those are your liabilities, or you borrowed money from the bank to do your business. So that form part of your long-term liabilities, bank loans that you have to pay, whether depending on the tenure and all that. So this form your liability. What you currently owe, your how can I put it better? Your exposure, what you are, your money that will leave your expense, or to some extent, yes, it's not really an expense really, but what we have to leave your hand to another companies and individuals that is what you can call your liability. You understand? Generally, your borrowings, all sorts. What you have to pay for good supply and all this, they're all what we term liability. So, like I said, this also is part of your balance sheet. So these are things, if you understand these things, it will help you to manage your business better. A lot of small businesses, they don't take cognizance of these basic things. Some of them don't even really, especially when you don't have an accountant. Some of them, most businesses, some small businesses don't have an accountant on their employment. Some of them do even sometimes, and it's understandable maybe because of cost. Some of us, some small businesses, they are even their own accountant. You understand, which is understandable because of cost. But If you understand this balance sheet, if you understand that, that's basically what constitutes the finance of your business. It will help you to see how you can quickly move from one point to another, how you can scale your business to the next level. Then we have what we call owner security. Basically, on the balance sheet, you talk about, this is telling you, okay, what did you start the business? What are the capital that was injected to the business in the first place? As in the capital you started the business with. You understand? These are what large corporations do. They know what they started their businesses. They know what is being injected. Then when they make profit at the end of the day, they know the part of profit that has gone back into the business. They know the part that they shared to pay dividend or to as profit sharing to staff or whatever. You understand what I'm saying? So they have this. So they know funds that are being that. Then under this equity too, you know funds that you are getting from other people too. You understand? That you are getting from, maybe you have investors, maybe your family. It can be, investor can be a form of family. For small business, some of this money sometimes they are not expecting anything from me. They just give before you want to start business. They inject this. All these funds should be part of your equity. Should be on the equity side of the business. So like it's explained, the amount of money that will be returned to a company shareholder if all the assets were liquidated and all the company there was paid off in case of liquidation. You understand? So if peradventure there is a need for you to I don't pray we get to that position. That means a business go bankrupt and there's a need for you to sell the business. The first set of payment you will have to make in normal circumstances, you first of all pay your borrowings. Equity is usually the last. So that's why sometimes you see large business, they tell you that equity is better for business. You understand? Because anybody that invests in your business can only make money after you have made profit. If you have not made any profit, you are not expected to pay them anything. So it's a bigger risk, but better reward. So if I borrow money from you, I'm going to make out of your profit. But someone that is putting money in your business, we make larger chunk from your profit. But the other way around is a risk. If your business goes bad, that is, if you buy shares in a company, if that company goes bad, they are not under an obligation to refund your money. It's only after they've finished paying the person that borrowed their money, then maybe they lent money from that, they will have paid the bank first, they will have paid their customers, people that they bought goods from, before they will think of what? Paying shareholders, whether large or small shareholder. That's the way business, that's basically, this is what constitutes a business on the flash. Every other thing now getting to the nitty-gritty of the business. So I can move to the next. So you can see it's an interactive. I've done it. What do you need to run a successful business? So now that you understand what constitutes your business finance, what do you need to run a successful business? Like I said, I'm not, this kind of presentation, I think, is better given by Dangote, Elon Musk, people that have done business for a while and they become experts, because sometimes the theoretical part of it is actually different from the actual part. Because like I understand, I've been relating with businesses for a while. I've been in a position to render advices to business, and also what I'm saying is there's also an emotional part of every business. As a business association, you need to have some level of intuition, because it's not a form of venture that you can figure the profit now. You understand? There was a tweet on Twitter when there was an analysis of businesses that Warren Buffett at some point was one of the richest people in the world. And what he does is he hardly owns any form of business, but he invests in different kind of business. He's one of the largest shareholders in Coca-Cola. That means the Coca-Cola bottling company. He has most of his investment in. So he's a portfolio investor. So what he does is he analyzes business and this business will go well. Will be okay. This business will do well. Maybe after my analysis. When they analyze business, I have costs to analyze. One of the things we look at when we analyze, we look at even the investors. Who are the people on the board of this business? What's their integrity? That's how far, when you want to analyze business, what's their integrity? Are they consistent? Are they the kind of people that will surely do anything to keep their word? Because it's also important in business. We need, when you want to invest, you need people that when they promise A, they are willing to do everything, I tell you, everything to ensure that A is delivered, because it's also counts people that they don't give up easily. So that the kind of, so Warren Buffett, what he does, like I said, he invested. So they were not, there was something that was on Twitter, I give you an analysis of businesses he invested in. And Elon Musk, if you know Elon Musk is currently the richest man in the world. No, I think second richest. Is between him and one guy. He was richest for a long time. I don't know whether he's currently the richest, but it's always between him and one other guy. Somebody start dragging with him in just a few months or whatever ago. So, but throughout last year, he was the richest person in the world, and he's the owner of Tesla. Tesla is electric car. He has Tesla. He has a lot of other. He's into he has a satellite company. He has a boring company that's into construction, drilling of underground and all those sorts. So, unfortunately, Warren Buffett did not invest in Tesla. So he was not asked the question, why didn't Warren Buffett invest in Tesla? That means at the point that Warren Buffett did not consider electric cars a viable investment. Fortunately, that means it was not accurate really, because it is that same electric car that have made Elon Musk one of the richest man in the world. You understand what I'm trying to say? So sometimes business people too, they are not usually very accurate. And Warren Buffett is actually rated as one of the great investors in the world. He has an eye for good business, but one of the things he has is he does not really like technology. He's so skeptical about most technological-driven companies that technology is behind, is their main source of service or product. So probably that's one of the reasons. So what do you need to run a successful business? Like I said, I am not a Dangote, I am not an Elon Musk. So what I'm sharing with you is things probably got from few years in school, a few certificate courses, or observation of, because I've been part of different business. I'm currently part, maybe from my things I observe, why watch my MDs, CEOs run the business, because one of my major jobs is to advise them on what can go wrong with the business so that they will look out for it. So, like I said, if you want to run this, I think you need a well cut out objective, goal, and vision. And I think it's one of the major challenges that small business, medium business owners don't take seriously. From my own observation, I'm not saying people in this gathering don't take so seriously. I'm just saying from people I've observed, I've related with, most small businesses don't have clear objectives and goal and vision, which is one of the reasons sometimes it's difficult for them to identify risk. You must have a clear vision and it must be written, well documented. If you don't have it, I will advise you that you go and get it done. It's never too late. Whereby you know where you are going to. Why are you in this business? Is it, if it is for charity, you will do? Is it for profit? Okay, how much do I want to make? In so number of years, where do I see myself? You understand which problem do you really do? Is this business just to take care of myself and my family, pay children's school fees? You understand? You have to have a clear goal so that this will guide you. There's nothing that says this goals or vision should be casting, so you can always review them. You understand? If you can afford an expert, get an expert to get you to have a clear goal, vision. Sometimes this vision, you should put it in your office so that it keeps you focused. You know why you are here. So sometimes it ginger us, it helps us when we come across challenges. These are the reasons why we continue to go on. Then, like I said, a professionally prepared strategic plan. You need a plan. A goal objective is different from a plan. A plan gives detailed on how that business will be run. Daily, it can be 5 years, it can be 10 years, it can be a year. How you will run the business, what you need to run this business, a plan. It does not mean that you have to go, everything must be done, but you should try as much as possible to ensure things are done according to this plan. If there will be a deviation from this plan, you really, you understand what I'm saying? To really have to be an exception. That's the way it is. Because sometimes, most of the problem we have as business owners that I've observed, I've done some business myself. I ran a particular business for like 7 years. You understand what I'm saying? Is that we allow a lot of distractions. We get distracted a lot. Sometimes we leave what our goal, we start looking at, there's money in this place. I was talking to somebody this morning. He was telling me, he's a real estate guy. He's facility manager. He wants to go into agriculture, poultry. Somebody told him they were giving the guy 1 million daily. He gets 1 million daily from the poultry. When he visited with the man said, no, for what I've said, I'm not going to take 1 million. Now he was giving 3 million daily. Because of that, he wants to go into. I told him, fine, it's good. But what I'm saying is, have you asked what amount of investment has gone into that poultry before that poultry can give that man 1 million naira daily? You understand what I'm saying? So these are the things. So you need those. We should avoid a lot of distractions. Sometimes there are major challenges that small business owners go through. I'm not saying big businesses too don't go through it sometimes, but most of the time, those are the challenges. Then form a company. What I mean, I'm not saying your business is not registered. What I'm trying to say, because I believe I'm addressing SMEs here, or what I call MSMEs. You understand? So what I'm saying, a lot of small business owners, they don't have a company. What I mean by a company is this. Sometimes you need to bring maybe a friend as a resource based on the set of skills to be part of your business. You understand? You like I was talking about what constitutes the finance of a business. I mentioned equity. Sometimes some of our running around, we need to get family members. What I mean, family or friend, I'm not saying it must be your family, because you can get cheaper from them. So if you don't form a company, that means they can bring it into in form of equity. You understand? Now it is not borrowing that it's form of equity. It can be part of the business. There is something like, it's my business, I must own it 100%. Sometimes if you act this way, you will not be able to scale up that business. Sometimes some of them, you bring them in to check you. You know your weakness as a person, your emotional weaknesses. I've seen a business whereby that business was able to thrive because the owner of that business brought in a friend. It's a friend, but an elderly friend that he knows he can't talk to anyhow, because he talks down almost all the staffs. You understand? But when this person shows up, he calms him down and remind him of there are processes. Let's go through this process. And I feel it's one of the reasons why that business has been able to scale from one company to about 2-3 companies, because that person is like a what I can call a father figure. It's not like the difference between them, but it's somebody he knows he can't talk to anyhow. Because when he gets angry, he almost flares up. But because sometimes when that person, you just tell him calm down. We have policies. Let's treat this case using our policy. Before you know, okay, let's send this person to this. But it's natural self like, oh yeah, you are fired. You understand what I'm saying? Most time when he's not around, he fires people. Before you know, before the guy comes around, he has fired 1 or 2 staff. But when the guy is around, so that kind of balance. That's why I say it's important for us to form a company, bring people into the business. It doesn't have to, you don't have marketing skill. You know, maybe after you draw your plan, you know this is what this business needs to get to the next level. Okay, bring people in. Sometimes it's not all the time that you have to pay them salary. Fine, they may need to take salary, but let them be stakeholders. You understand what I'm saying? So their focus is not on the side. Their focus is, oh, when this business go, I am a co-owner. You understand what? Sometimes they may have to inject funds. You understand what I'm saying? They don't, and it's not all the time they have to inject funds. Even their skills, expertise. So these things are very important that we, like I said earlier, that we determine whether our business will get to the next level or not. They learn to use other people's money, equity. Some people say, I don't want to borrow. I can't borrow. Like I said, cash is king. When I was talking about asset, there are a lot of businesses, they borrow money. It's not because they don't have funds in bank, but because they know once that fund is invested, if they lose that fund, it's a lot more difficult to get it back. So they would rather go and borrow and keep their cash. You understand what I'm saying? So because they know your cash should be used for emergency needs. You should be able to have some form of liquidity, because most businesses die because of liquidity issues. If you remember, some banks in US had issues recently. Most of them is because of, it's not because they are not really very good bank, but because they had liquidity issues. So liquidity risk is one of the major risks that all businesses should guide against. So you have to know how to use other people's money, equity, a blend of equity or loan, so that then, like I said, I'm made to understand that this is for small businesses. So I say hire an accountant you can respect his or her advice, or use accounting software. If you cannot hire an accountant, use as basic as, look for one account. There are a lot of them, a few of them that are free on the internet. You can download and use them to manage your business. If you cannot hire an accountant, not just an accountant, an an accountant, you can respect his advice. You see a lot of people, they hire people, they don't respect their advice. And that's why, you understand, they bring in people, yet they don't listen to them. That's why a lot of business go down. When why hire somebody you can't respect, that gives you advice and you don't? So if you can hire, at least use basic accounting. There is no business that does not require accounting. Even if it is a small supermarket, if you introduce proper bookkeeping into that business, a lot of people that have been doing business for years. I have a friend, she's been running a bar for years. I don't think she knows her profit. She does not know her profit. She just make money spend, and she has been surviving like that. And sometimes, and it has been difficult for such a person to go to the next level. You understand? When the downside of that business comes, then she's in a very big mess. So it's not all the time that you have, but when you understand, you know what is your profit. This is what I can spend. Even sometimes a lot, and that's one of the problem with a lot of small business. They don't pay even themselves salaries. They don't have salary. They spend from the business. You should have a salary. So let's move. Why do business? This is the next question I want to ask. Why do businesses go bad? One of the reasons why business is because of what we call financial risk. Then all the components of financial is what we now have there. We have market risk, liquidity risk, operational and credit risk. So what is a financial risk? The possibility of losing money on an investment or business venture. This is in risk balance. This is what we call inherent risk. Every business, all businesses, whether, like I said, if during the course of this seminar, you saw you had me mention a particular bank, SBV, that got collapsed in the US. That bank, I think it has been running for 40 years. So you can imagine, it's not like the bank started yesterday. The bank has been on for 40 years and the bank eventually went bankrupt. Then I started looking for people to buy the business. So the possibility of losing money in every business, no matter how old the business is exposed to this. One wrong decision can make you lose money. So you understand that it's not about you. You are not alone. All businesses are exposed to this risk. Possibility of losing money on an investment or business venture. So this is what we call financial risk. So, like I said, under financial, we have what we call liquidity risk. This is the possibility of an individual business or financial that cannot miss its short-term debt obligation. This can be crazy at times. You understand? When you need to maybe pay salary, you don't have cash to pay salary. You need to put stock, you don't have cash to put stock. You understand? Or you have obligations to make, maybe you borrow money, you understand? So these are the financial cannot meet its short-term debt obligations. That's what liquidity risk is all about. So how can you what are the mitigations? How do you get a proper budgeting and cash flow plan? You must have a proper budget. This is one of the major problem of medium small business. Most of the time they run without budget. You must incorporate a budget system. It is not when you make money you spend. You have planned that you are going to spend the money you are going to make. Must have a plan. This is okay. This is how much you are going to use to pay salary. You don't just, this person is good, you are bringing it to the business. No. You understand? You have a plan. If you want to promote, you have budget for promotion. You have everything. That must be proper budgeting. This is how much expense we need. This is how much we need to make at the beginning, by the end of the year, by the first quarter, by second quarter, by third quarter, by fourth quarter. You understand? You need to understand, have a plan, a budget in place. Okay. Then your cash flow planning. Okay, when this is how we dispense cash, so that you always be liquid at all times. That's why you see some business, they will tell you, okay, if you supply us so good, we are not paying until the end of the month, we are not paying until 2 weeks, we are not paying you understand? It's because they are trying to plan their cash flow. You understand? There are times like the bank that had issues in the US, it wasn't really because they don't have money. Sometimes what happened to them, probably sometimes to inability to manage effectively their reputational risk. Because when the crisis happened, they still paid over $400 billion, to customers. Somebody with over $400 billion in cash is actually a liquid organization. But because they are envisaging a problem, they approach their shareholders that we need to raise fresh funds. Cheap, we were probably looking for cheaper, which is a problem that could have even been solved by borrowing. $2.2 billion is what caused problem. So there was panic. So the investors said there was problem. So they started withdrawing their money. And there's no bank in the world today that if all the people that deposited money in that bank choose to collect their money, that will be able to sustain it. Why? Because some of these funds are given out in credit to customers, loans to customers, and these loans will not come back maybe after a year, 20 years. Especially in places like US, sometimes they give loan for as long as 20 years, because some of them are involved in mortgages. And the problem they had is not actually their own problem. It's because they invested in what we call bonds. And that bond, their interest-driven bonds, what we call sometimes interest-driven bond. That means when there are changes in interest, it's affecting the income from the bond. You understand? So that's what. So another way to solve it is get highly skilled sales and marketing team. Why am I saying this? What you need therefore is you need to sell, and you need people that can sell well. Sometimes the difference between one business and the other is not because they have great products, it's because of the quality of their sales team and marketing team. That's why you see a lot of large corporations, Coca-Cola, they spend a lot of money on marketing. It's not probably because they are not selling them, but because they understand they need the liquidity. They need to continuously get funds in. They need to continuously get funds. That's one of the reasons why it's banking. In the banking sector, a bank must always look for deposits, whether they have enough or not. It's a system that is driven by liquidity. You have to have high liquidity. If you want to survive, you must have a lot. Deposit must always be coming in. And that's probably one of the reasons why during that season we have issues with the bank. It's because people are not taking funds to bank again. Rather, they are looking for bank to give them money. They are not taking funds to bank again. They are not giving bank cash. They are always looking for bank to give them cash. So that's why we had cash problem in that it's almost in that. Then leverage. Like I said earlier, take loans when possible, get equity when possible. That's what leverage is all about. Then credit risks. For some of us, there are some of us that are probably into business just because of competition, which is sometimes depending on the industry where you operate. Competition these days can be so keen. Some of us tend to give credit to some of our customers. That means we give them our goods in credit, expecting them to pay us so time. It's very risky, especially when you are not a bank. Even banks too, the main source of making funds for banks is credit. They still run into a lot of issues when it comes to getting customers to pay their loans. That's why they do a lot of things. They secure credit, they do insurance. You understand? They have different specialized staff for recovery purpose and all that. At the end of the day, they still run to issues. It's not all funds that go out that come back. So when you want to start giving your customers credit facility, you really have to be ready for it. You understand? Sometimes you have to ask them for security. Don't just say, because person is doing it, me too, I must do it because I need to compete. Because some of the companies that you are probably very liquid, and it's part of their strategy. They have a lot of funds, they have a lot of liquidity. So if this person does not pay them when they are supposed to pay, they are not really bothered. They can still afford to keep their business. But when you know the level of liquidity in your business, and because you want to compete, you now start giving credit because you want to sell. It's better you have those goods in on the shelf or whatever in your store, and you have also better that you are giving that to somebody that you are not sure will pay you back. You understand? That's why you have to also do what I call counterparty assessment. You understand? You have to do it. That means you assess people, carry out due diligence on your customers or your business before you give them credit. Then sometimes you may have to go the extreme, take extremes and no credit today, come tomorrow. That means don't give credit at all. Just like I said, when you give credit, you need a lot of secure the credit. You need to do a lot of things. So if you know you don't have that kind of expertise, don't say because you want to compete and start giving people credit. It's better you maintain your stand. You just probably need to be a lot more aggressive to sell. You just probably need to get highly skilled salespeople or marketing guys to sell your goods. You will always sell. So instead of you, because of competition, you want to do credit, I will advise you, better tell them you don't do credit. If you want to buy goods from me, you have to pay for it. So you understand? So there is something we also call market risk. This constitutes part of financial risk. When I say market risk, basically what we are looking at is these are things that when they happen, it's not just a particular business. The market is the possibility that an individual or other entity will experience or due to factors that affect overall performance of investment in financial market. That means something that can affect a economy generally. It can be like probably what happened in Nigeria, policies of the first central bank. It affected almost all businesses. You understand? Though probably some business probably were well positioned and they cash out from the situation, but that it affected almost all businesses. Almost all businesses. So those kind of things is what we call market risk. These are uncertainties, things that can affect the objective, that can change your plan for your business. So these are the kind of thing, foreign exchange, fluctuation in foreign exchange, interest rates, like what CBN just raised the interest rate general to about 80%. I mean, the cost of borrowing fund goes up. If you have taken a fund from a commercial bank, by their policies, they will have to change the interest you pay on the loan. Because one of their policies that when you take a loan from a company, they will tell you that if you are paying back, if there is an increase in the MPR, that's monetary policy rate, your interest will go up too. So they can always change your interest. So if you apply yourself, whatever you pay on the loan will go up because of the policy of government. So these are kind of things that will come market, things that affect the business generally, that is not within your control, that is basically nothing you can do about it. But some of the things we basically advise is diversification. They don't really solve the problem. It's just that we can offer the answer and do nothing. Open branches so that your business will not be concentrated in one part. So if anything happens to your business in one area, you can always continue to do business in another area. Some of what this can be like a form of business continuity plan. Then build a website so that your business will now go global. You don't depend on a particular state or a particular country for your source of income. If you build a website, a proper website, anybody can reach out to your business depending on how well you promote that business. That's the purpose of doing website, is to expand your scope, to expand your reach, so that you get what I'm trying to say. The way you talk about operational, this is also inherent in almost all businesses. Whether you like it or not, almost all businesses are exposed to operational. Operational summarize the uncertainties after the company faces when it attempts to carry out its day-to-day business activity within a given field or industry. Fraud, all these are human risk. Your staff does not come to work regularly. Major business, almost all businesses in Nigeria are exposed to human risk. That means human resources issues, thefts by staff, a lot of things. So one of the ways you can look at this automation, that's why you see, if you are very conversant with the with internet, you will have heard a lot about AI. That's why you see a lot of big organizations are putting money into artificial intelligence. It's a way of, they are looking for a way to automate their business to that's why you see a lot of companies, they invest, a lot of logistic companies abroad, Amazon, they use a lot of robots to carry out a lot of functions because they want to reduce human factors in their business. So automation, like a rule of law rather than force. What I'm saying here is that because I'm looking at a lot of small businesses, they don't do a lot of policies, and that's probably the good part of a large corporations. They have a lot of policies, procedures, SOPs. You probably, to move your business to the next level, you need to live by rules and policies. Don't live by force. Your emotion. Don't let your business be controlled most of the time by your emotion. When you are feeling good, the business is feeling good. When you are not feeling good, the business is not feeling good. Learn, build policy, create policies. You can engage people to do this for you. If you go on the internet, you can get a lot of policies that you can adapt for your business. Create policies and ensure the business is run by policy. Go cashless. This will go a long way to reduce fraud. One of the a lot of us must have been conversant with cashless policy. Basically, cashless policy. Why federal government or CBN is championing cashless policy? It's not because they really love your business. One of the reasons why they do, they want to be able to capture business environment in Nigeria. What I mean by that is they want to be able to know the they want to see how movement of funds, movement of cash. So when this thing is physical cash in the hands of people, it's difficult for CBN to track the movement of cash. But when it is in electronic form, it is very easy for CBN to track those cash, and it is very easy for them to determine the pace of the growth of the very easy to when it's like that. That's why I say in the developed world, it is just even in Nigeria, the CBN is saddled with creating jobs. But a lot of time, our CBN governor is not being rated for that. But in developed economies, their CBN governor or their federal bank governor is saddled with the creation of jobs. So because but since their economy, they are able to capture most of the funds in Zagreb because most of their businesses are in electronic format. So along with they are able to make what I call policies to encourage the growth of the economy. So basically, the reason why government or CBN champions cashless policy is not because they love your business. It's because what they want to be able to understand cash flow in the economy. They want to know where funds are in the economy. This is where the money. This is the bank that has the money. This is the businesses that have the most. Mostly these are the areas where the funds are. You understand? So they know the direction of the economy. They know the movement of, so that they can make policies. They can make policies that will affect inflation, that will drive foreign exchange and all sorts. So that, but for us as business people, why do we need to go cashless? One of the reasons why you may need to go cashless is to reduce fraud. That's one of the reasons why you may need to go cashless. Reduce fraud. Therefore, ease of business, especially in these times. If you are not, a lot of businesses, they still don't have a POS. You understand? You must have, no matter if you got anything you can do, your business environment, you must have at least a POS there, so that you have different means through which your customers can pay. Either they transfer funds or they use their ATM, or then some of us don't even have a website. We probably need to build one and make it, especially when you are into a high level of commerce, so that customers can pay online. Incorporate all this technology into your business. We have companies like a lot of all these quick teller and all this that you can incorporate into your site to enable payment. So there are a lot of them that we can just embrace this technology in order to be able to drive your business. Because the earlier you get ready for this, the best for you. Because changes happen in the economy as fast as possible. I can remember when mobile internet started penetrating, as in when people were able to solve internet on their phone. It happened like a miracle. A lot of people that were into cafe business, they were not prepared for it. Some of them, they lost their businesses. So this is why we need to embrace technology to get ahead of what? Of development, to get ahead of growth of the economy, because some of these things happen fast. Then one of the advice I'll give in tackling the operation is treat your staff as you will treat your customers, because most businesses don't grow because even the staff of those where they can't sell that, they can't tell others about those businesses. People that are working with you, when they cannot go out and sell your business, man, you are in big shit. So you need to learn to take welfare. What do you think your staff think about your business? Do they even just come to your office just to collect their salary and get out? Can they buy shares in your company? If you wake up tomorrow and say, I want to sell shares, will my staff subscribe to those shares? These are things that a lot of small businesses that they don't take seriously. And probably things we need to start taking seriously. You need to be sure that your staff, they love you too. They love the business. They are invested in that business. And this can only happen by how you treat them. Till tomorrow, the cheapest form of marketing is what we call word of mouth. And to a great extent, this has become a lot easier with internet these days, social media. You can imagine if your business are the world championing because of your business on Twitter, on Instagram, on Facebook. You can imagine how fast your business, they are doing it, not because you ask them to do, but because they care about the business. That's the way it should be. If your business is not like that, man, you've not started business. You have to learn to treat your staff, treat them well. It's not about increasing their pay alone. It's okay when they give back. Sometimes as simple as attending or remembering them on their birthday, or asking them, what's wrong with you? You are not looking good. It's not about pay raise all the time. It's about your interest. Where do you stay? How do you get? Okay, don't worry, don't worry. You don't have to come to the office every day because of where you stay. You can work from home. Okay, you understand what I'm saying? Okay, used to be a lot of go-slow. Don't worry. So that's why you see some big organizations, they have staff boss for their staff. They have a lot of things. So these are the things you need to learn because they are the best people that can easily say, when your staff go out and talk bad about your business, you can imagine, and you are saying you don't have customers. How are you going to have customers? These are small things that a lot of business owners are not taking seriously. That's why you see big corporations, they pay bonuses, they do all sorts of things, incentives to their staff. It's because they know how important staff is. They are your first customer. Then another way is ensure your risk where possible. For example, like some of the risks we can have is fire and burglary. There are insurance. So a lot of businesses don't do insurance. When fire now happens, that will be the end of the business. And they will start saying, rather some people will be praying. You can't pray so that your fire will not happen to your business or thieves will not attack your business. But when you do insurance, if it happens, the insurance bear the cost.
Excuse me, sir. Thank you so much for the insightful session. I'm sure that, I've been taking notes, and I'm sure that my book, a whole of the other small businesses on the session, have, they have points filled in their jotters. However, we're almost running out of time. So I would like for us to give the small businesses time for them to ask questions just right before you leave, so that you can help us attend to the questions. Please, if you have any questions, kindly let us know in this comment section. We will take 2 questions through the show of raise of hand, and then we will take other as audio questions. So if you have a question, kindly indicate by raising your hand in the participant bar. Thank you.
Okay, yeah, before this is the last part of this thing. It's just like a icing on the cake. There is a CBN fund, about 220 billion fund for medium and micro enterprises. So just this from CBN site, you can access this fund. If your business is in agriculture, manufacturing, cottage industry, artisanship, services, trade and commerce, renewable energy, and all this. So just to buttress that this is as practical as possible, that's why I brought this up. So you can get as low as 500,000, as much as 50 million. Like they said, you can get it from any microfinance, but I don't guarantee that all microfinance bank can. But some commercial bank, but the best place you can go to, if you know Bank of Industry or Bank of Agriculture, if you approach these organizations, some of us, we don't know about them. Bank of Industry, you can Google it. There's one on the island. If you get fund as cheap as 9% a year from them. Or NISA, there's a microfinance bank owned by CBN. NISA, NIRSAL. So these are the things so that we can get cheap access to funds to do our business. So that should be the final note on this business. So I will be waiting for your questions.
All right, thank you so much, sir. So we have 2 show of hands. Zainab Zubar will go first to ask a question, then Adewale Adedipo will go next. So Zainab, you can go ahead to ask your question now.
Okay, good afternoon there, Kisa and everyone. Please, can you hear me?
Yes, we can hear you. Please go ahead.
Okay, the question I wanted to thank you for this session is very timely. The question I wanted to ask is regarding selling on credit. I love the part where he said, if you can afford it. But there is this, I don't know whether I should call it a trick that some people are using on most of us. Like they don't come in like they want to buy on credit. They buy something from you, and some of them will tell you, give me your account number, let me pay. Then some will tell you that the network is bad, let me get home and do the transfer for you, and later it becomes a credit. Or some will do part payments for, I'm going to transfer the remaining one, and it becomes a problem. Like I have an issue for ground now since December. The person have not sent my
Hi Zainab, please, are you still there?
To me. So my question is, as a small business owner, but can we avoid such? Hello, can you hear me?
Yes, we can hear you.
Okay.
So yeah, so Mr. Oluwatoyin, I think what Zainab was trying to ask is how to prevent customers credit, right? So she's mentioning a part where she had a customer pay, say they pay, but she hasn't received the payment since part payment, and she hasn't received the payment since last year. So what are the measures that small businesses have to put in place to avoid these type of situations? Thank you.
Okay, yeah. Like I said, that question is tricky. I mean, the question is tricky. What I mean, as in, it's difficult to get that advice in this situation. That's not really a credit. That's like a fraud. Yes, because if someone comes to you and says, "I want to buy something," and is because of issues with network generally, electronic payments, promise you, no, this thing is not good, it's not good, and at the end of it, goes, promise to send him, and I never sent him. It's a fraud. It's not, that's not credit. That's not credit. Before you, when you say credit, before you give somebody credit, there will be an agreement between both parties. I want to give you, and you have to determine, can I give this person credit? Probably because I know his house. You understand? Because these are the basic KYC you do when you give credit. You have to know the person. You can't give somebody you don't know his house. So I know him. I know his character. You understand? I know if he says something, he will do it. So, but that person it doesn't even work right, such person. So what they've done is fraud. And one of the ways you can, when it becomes fraud, that's why I say it's very difficult to advise, because some of times, as a business owner, I want to keep our customers. So sometimes we know what to do. We don't want to do it just because we feel they will still come and buy from us because they've been buying for a long time. But in usual business balance, such a person is not a trustworthy customer and probably will have been buying from other people when you refuse to pay your own money. So it's not left for you to see whether you want to use force to get your money back. So that's why I said one of the things we probably need to do is probably get multiple payment points in our businesses so that, okay, you come, we have a POS, use POS, that one gives you instant answer. You understand? If it's declined, if it's accepted, you know. You understand what I'm trying to say? So you give them several options through which they can pay. You can make up your mind that if you want to transfer, if that's not due, sometimes why we get it to such a job, because transfer is probably the only option we have. So, and we have to sell. You understand? But if you have a POS, it's only when the person has tried POS and POS did not work, that's when you now be looking at doing transfer. You understand what I'm trying to say? So, so it is left for you whether you want to use for, because that person I don't classify such people as customers. Okay. A fraudster is not a customer.
All right. Thank you
if
so
I
much.
promise you I'm going to pay you, I should pay you.
All right. Thank you very much for that. We'll be taking one more questions from the reactions, and then we'll be taking one question from the chat. So I would, Adewale can ask his question now.
Good afternoon.
Hi, good afternoon. We can hear you. Please go ahead and ask your question.
All right, thank you, ma'am. Thank you, Mr. Oluwatoyin. The class was insightful. So I'm having a little issue with your definition of liabilities, because from my own knowledge before, liability, I think that's what we spend money on. And when you were giving the teaching, you said that liability is, you talked about accounts payable, current portion, long-term debt. and you made mention of, okay, having a vehicle for your business. So you didn't classify that under liability, you classify it under assets. And for my own secondary school definition, how they taught us that liability is what you spend money on. And since you having a vehicle or a car for your business, there are some fund that you'll be like, there are some things that you'll be doing on the car, maybe repair or stuff like that. So please, I need more clarity about that liability.
Yeah, it's a common issue that a lot of people have when it comes to classifications of liability. So, but when you talk about a balance sheet, what I showed you was what we call a balance sheet, and that's a recognition of items, business items on your financial. Yes, an asset. A car is an asset. Why? The expense you make on the car is what we call an expense. You understand what I'm saying? But the car itself, you put money in that car. That money you spend in that car is an investment. One, that car is used for what? Is to move you to enhance your business, especially when it is not for luxury. You understand what I'm saying? You want to go for sales, you want to go for marketing. You understand what I'm saying? It's to enhance your business. So it is a fixed asset. That's why it is classified under fixed asset. The only thing at some point is start depreciating. It's all assets that will depreciate. That's why we talk about amortization. We continue to amortize, or maybe you can say over a period of 4 years, 5 years, so that at the drop in value in your books too, they are also equally dropping in value. Maybe when you bought the car, you can classify it, maybe you spend 20 million. After a year, that car in your books will not be worth 20 million again. That means that's why we call them depreciating assets. You understand what I'm trying to say? They are losing value over the years. You can say in your own, we want to recognize the asset for 5 years, some 2 years, some depending. You understand what I'm trying to say? So it's because you purchase that vehicle. Let's say, for example, a very clear example, pure water bus. When you buy a truck for pure water business, why did you buy the bus? To move around produced bottled or pure water. So it's an asset. It's part of your business. It's an investment. It's your capital, your initial capital. The way you now talk about liability on your balance sheet, anything is liability is when you talk of expense, it's another in company finance, it's another how do I put it? It's another document that treats that. Like I told you, we have 3 of them. We have cash flow statement, we have income statement. It's under income statement you now look at expenses and income. You understand what I'm trying to say? That's how you now identify things that takes money away from your business and things that brings money in your business. So things that bring money, the money that comes as income, the one that goes out become expense. You understand what I'm saying? So there is another statement, financial statement that deals with that, which is called income statement, profit and loss statement. So whereby all the things that are bringing money into your business are identified. You understand what I'm saying? So in both contexts, you are correct. There is nothing wrong when you use it like that. But it depends on the context in which you are using it right now. You understand what I'm trying to say? That's why it's like that.
Thank you so much for that clarity.
And if you look at those definitions, they were not my definitions.
We are just like I said earlier, we are already out of time. So we'll be rounding off like real quickly. Thank you so much for the insight. Thank you for the clarity. I'm sure that the business owners were able to take down enough notes that they would be leveraging for their business growth. Thank you so much. We're so delighted to have you. We'll be taking the last question from the chat, and then we will just we would round up afterwards. All right, so we have a question. May says, is it advisable? Where is it? Okay, May says, is it advisable to use the same bank that you have used for your personal account to also open your business accounts? Right, she said, is it advisable to have my business account in the same bank as I use for my personal account, or should I use a different bank? And can she open a USD account as well? That's a dollar account or a foreign currency account as well. Thank you.
Basically, it just is about personal decision. There is nothing you can have multiple bank accounts as a business owner, depending on the level of business you are involved with, the depending on your client. Probably if you have clients maybe GTB, and you think it will be more convenient when your bulk of your client is probably maybe in Access Bank, and you think it's more convenient for them, you can open. So there is no law that is against that. It's just a personal.
Thank you so much for that. Thank you. Okay, we have
Then
come to
USD account too. USD account depends on the kind of business
that you are
you can
running.
open. Yes, you're allowed to do, even individuals who have dollar account. You understand? So.
All right. Oh, sorry, there's this question. I think there's a business owner asking, when is the right time to sack yourself as the CEO? I guess the question the person's trying to ask is that when is it right for you to put somebody else in charge and oversee the business operations?
Yeah, it depends. What I'm saying is, I don't think there is a right time for such thing. It depends on your plan. When you feel, if you feel you are not in the best position to manage that business, you feel you can get other people that can do it better, fine. Or you want to go into other things, you feel you've done your best, but at least you have put the necessary framework in place, and you feel that with what you have done, someone else can run the business effectively. Why not? Always, it depends.
All right, thank you, sir. So because we have run out of time, we know that a whole lot of you still have questions. You can do well to send it to us, and then we'll forward it to the experts and have him answer all your questions. Thank you so much once again for joining this webinar session. We're always excited to have you on the session. Right, so we've come to the end of the session, and so I'll be announcing the winners. The winners for today are Adetoms, Bird, Timi Precious, Zainab Zubar, Totality, and Oluwatoyin Oderinlo. Congratulations once again. Thank you so much, sir, for coming onto the session today to provide insights. We really appreciate you. Thank you so much. For the winners, you can reach out to us on our Instagram. You can reach out and provide your details via Instagram at Kilsa Consulting. Also, if you joined the session late and you would like to catch up with all the details and insights that was provided on the session, you can kindly check our YouTube page. You can you should subscribe and like, and also turn on post notification for when we have new content on the YouTube. Our YouTube handle is Kilsa Consulting on YouTube. You can also follow us on other social media platforms. It's at Kilsa Consulting on Instagram, at Kilsa C on Twitter, at Kilsa Consulting on Facebook. It will be nice to when you follow us, it allows you to stay up to date on information and be the first to know when we have any updates for you. Thank you so much once again for joining. We appreciate you. We also have a special announcement coming up on our Instagram page for you. Please anticipate. Until we see you next time, thank you for consistently showing up and for always seeking insights to implement for business growth. Until we see you next time, bye-bye.